Assets is for sure a leading impact investing firm. It's structured as a nonprofit at the sort of meta level, though it does have some subsidiaries. And we work together with investors and philanthropists to basically make the world better through a range of investment strategies, and then also with grant making. And we bring that full breadth of capabilities to tackle environmental and social challenges, and really look for trim tabs where we think we can affect real change, in particular, enabling private debt and equity investing into companies and funds in the impact space. And we concentrate on three core themes: climate solutions, racial justice, and gender equity. We do sort of everything everywhere, but I'd say those are our three kind of buckets of focus. And as you mentioned, actually, we're at 2.3 billion. We added 100 million since, I guess, that bio was updated, or the information. But we're growing pretty quickly as impact investing integrated with philanthropy gets popularized, and we've got about 2,000 DAFs and some other investment relationships outside of the donor advised fund. And we've done 1,000 private debt and equity deals to date. If you can imagine, one balance sheet with 1,000 venture investments and loans to nonprofits and investments in funds all in one place. Shockingly, to us, if not to anyone else, we're doing one new one per day, if you can imagine that. So every single day of the week, business days, we don't work on the weekends usually too much, but every single day of the week, a new private debt or equity deployment of capital from our philanthropic asset base is executed. And we're also doing grants. We did about 13,000 grants last year for $250 million in assets. So maybe 15% of our asset base kind of goes out every year just as grants. Even though the primary center of gravity is the private debt and equity investing, though we do use some ESG portfolios kind of in the public stock and bond markets too. I was reflecting back on sort of why Impact Assets was founded recently, and that's kind of embedded in the article. And it's really because philanthropic assets had already been designated for charitable purposes, and we knew that donors view this capital as being able to take on more risk or less return than their traditional investment portfolio. So we thought it was sort of an ideal context for maximizing the flow of capital to impact entrepreneurs and funds through investments. And we really felt that donor advised funds in particular were in desperate need of a kind of a version, I don't know, 2.0, maybe it's 3.0. This is back, more than a decade ago. But we know that donor advisors are passionate about causes. Their impact interests often correlate to segments that can really amplify their philanthropy. And conversely, their philanthropy, as we wrote in the article, can really act as a bridge into thematic impact investing. So they really, really hit where people's hearts and heads are at within the donor advised fund context, if you can just get them to the table. And it wasn't happening. So we decided to make it happen after beating our heads somewhat bloody for a few years with the Fidelities and the Vanguards of the world and community foundations, trying to get them to integrate some of the Calvert Impact and Calvert Investments product into their DAFs. And we decided to just do it ourselves initially. And I think really importantly, if you think about a donor advised fund, it's a ton of little, in our case, 2,000 families, individuals, corporations, foundations that have put money onto a common balance sheet, so they can really leverage the capacity and expertise of that facility and that balance sheet across a much larger operational and asset footprint than any one of those 2,000 would ever be able to have by themselves. And so it's like this big omnibus system that allows us to basically program the rules of the game. And the game is maximizing the flow of capital to social and environmental entrepreneurs and enterprises. And so that definitely, that hypothesis of how that would work and what people's appetites, I think it's largely, proven out, I'd say at this point with $2.3 billion and 2,000 folks and growing at a good clip. They also, those accounts are very notional. They don't have complex decision-making necessarily, or boards and lawyers all over them, the way a foundation might, or some other construct. So they're, in that way, also ideal. Now, that doesn't mean that at a centralized level, the donor advised fund sponsor, that would be Impact Assets, the organization offering the DAFs, or the community foundation, at what have you, doesn't have a ton of all that rigmarole, but we're able to essentially diffuse that or make it invisible, more or less, to the individual folks who are on the platform. And because of that aggregate scale, they're also a lot less expensive to operate than a private foundation, for example. And so all of that contributes to, again, what I hypothesized as being an ideal environment for moving really concertedly into impact investing from philanthropic assets. And again, I think we've proven that out. We wrote the article because, I mean, I can't believe still after 13 years, which you've reminded me is how long it's been, that we are still even having a conversation at sort of at an industry level about how DAFs can't really do this type of stuff. And yet we're also really optimistic that the $234 billion in DAF assets from like 1.3 million accounts, last stats I looked at, really are ready to be leveraged. And people have woken up, and we have popularized somewhat largely, I'd say at this point, the idea that impact investing and integrating value and values into investing, especially within philanthropic assets, should be something that people are comfortable with. And so, you know, our challenge really is like, what if all these DAFs from all these sponsors all across the United States put 100% of their endowments into play, not just the grant making, not just giving away yield and maybe doing a little bit of loans to a local nonprofit, but really going large on this. And I think as a group of folks, we really can challenge the DAF industry to build out investment platforms and capabilities to do this kind of work, and to enable it, and to like bring their donor bases into the conversation, rather than try to damage control when a donor comes up with an idea and the donor advised fund is like, oh, you can't do that. We've proven it's totally possible. And I think that that the jury's in on that. So it's time to really get serious as an industry. And I spent a lot of my time trying to do that, trying to I don't know, somewhere demonstrate to our peers and cajole them into adopting some of this. It's been a long, slow chipping away at the iceberg, though. Bottom line, as we wrote in the article, is individuals, institutions, whether they already have one or they're setting up one, are really open to the model. The fact that we're doing a deal a day, I think, tells that story. And some of those deals have multiple donors, many of them do, involved. And people really will lean in with patience or an eye towards being catalytic or going where the markets won't go, in a way with their donor advised funds and their philanthropic capital that they won't do in their private personal investment accounts or their endowments. So that's a really good ingredient in terms of capital raising, that you can get things funded from donor advised funds that you probably would have a really hard time getting from somebody's other hat. And what we're seeing is that a lot of entrepreneurs and funds in the impact space are positioning that kind of program-related investment or that donor advised fund option as a feature in their fundraising conversations, and that they're getting more people to the table faster by using that. There is really no investment structure that we don't do, at least. Therefore, I would extrapolate that anyone could do if they had the will, which crosses everything from recoverable grants and low interest loans to reasonably market rate interest loans, to safes, to convertible notes, to revenue rights, royalty constructs, to to priced equity rounds and any structure that you can think of. I think at this point we're in it, including initial coin offerings and things blockchain centric in addition. So what I'd say the other thing that we're seeing a lot, we didn't really touch on this in the article, but we're seeing a lot more is active pooling together within our donor advised funds from multiple parties to either invest in one enterprise, one fund, or even to completely forego a particular structure and to actually create what I think of as almost like a synthetic pool, and actually sidestep the kind of the traditional venture fund model completely. And we've done some combination of those different use cases almost 50 times. I was looking at the list the other day when I was thinking about this column. There's like 50 different little constellations of donor advised fund folks that have been organized and come together to make some kind of investment, in addition to the ones that are doing the one-offs. So all to say, I think that the time is really right to up this conversation societally. I think some of the saber rattling with the ACE Act, if people were following that, and some of the stuff in California around regulating donor advised funds is actually, although to the sponsors, a little scary, potentially changing kind of the rules of our game as sponsors, that it opens up kind of a venue or a context to perhaps really push some adoption of new and better practice around all of those idle assets, those 234 billion that are sitting around. And I think that momentum and pressure is growing in the DAF industry to lean into impact investing generally. So I don't know, Lori, I think maybe I'll pull up there for a little bit and open up for some questions rather than continuing to ramble. But the long and short of it is there's a really big pile of capital out there that can be catalyzed into this whole spectrum of stuff. And I think actually what we've seen is, as a donor advised fund complex, it's working more directly with donors who are willing to lean in and be creative and to move fast and better, that the foundations are taking some pages from the book. And I think the demonstration project isn't just for donor advised funds and that 234 billion, but foundations have, I don't know, it's like another trillion in assets. So 4+ times that. So we're really talking about $1.3 trillion that are in play when you talk about philanthropic assets that could be catalyzed. And that's been the work of impact assets.